Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report, everybody. Today is Wednesday, January the 19th. Before we get into it, I need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts you're going to be looking at are real-time market snapshots and may not be replicated going forward. First market, the Australian US dollar. Aussie USD had an interesting day. You broke above congestion. It was looking good. You had a good size range during the Asian session into the European session towards mid-morning, later morning in London town. The Aussie slumped, and then you saw some downside through the U.S. session. The bottom line is it's kind of disappointing for bulls. I tell you, you got those mid-month 401k flows out of the way, and the U.S. stock market slumped. So when you see the asset class market slumping like that, you saw a lot of a downside, and you saw a lot of upside for the dollar at that point, a lot of downside for commodities too. So Aussie U.S. dollar, kind of disappointing. It certainly is in a very interesting position here. Pinned between that weekly directional line up above it. It got above it today, but it couldn't hold above it. So the weekly trend is still down, and you've got good support on this long-term trend line. But if that support goes, you got to think that could open up the door to 96. That would open up the door to that December low you're looking at with the maroon line there, the monthly line. So, interesting position. Kind of hard to write off a big rally, though. Just because it got a little bit ahead of itself. Maybe some longs liquidated on the blip up today. So, it's to me, it's good to be a technician. Everything the market knows about itself, you're going to see reflected in that chart. So, if keep it very, very simple. If it closes below that trend line, that opens the door to 96. If it holds the trend line, the door is open for further gains. I think long term, though, you still very much have an uptrend in place here. Here's your weekly chart. I think you'd probably be more realistic to have these long-term trend lines in here. I think overall that's your trend. Something like that overall, where you could see the direction of it. A correction down to 95 probably be healthy. So we'll have to see. There's your yen. It's going to be. There's your Aussie. It's going to be interesting to see which way it comes out of there. You can see it's already lower, and the session just closed a half hour ago, and you're already seeing red on the chart. Let me get these lines out of the way here. Those are your longer-term trend lines. So, you can certainly see a correction here, and the overall bull pattern is still intact. On the other hand, it's the short-term trend is higher. Short-term trend is higher on the daily there, just kind of waffling a bit. Next market, Euro US dollar. Short-term trend higher. Euro was great today. It was looking great today. It had no trouble getting to 35. The figure, some traders thought, technicians thought, well, 35, there's resistance. Really wasn't a problem. Went up through there, holding its gains. There's room on the upside. There really is a little bit of room on the upside here. I don't think where'd you close this guy? I don't think you closed at 35. 34.73. But you're chipping away at that resistance there. You probably still have plenty of shorts in this market too. So if you run them out, you can see some upside. It's very interesting. You look at a pattern. You see a market that's been in a area. It's not straying too far from 30. It got back up to 30. It had a pretty good run. Came back to 30. It's really not straying too far from 35, I guess. And you see a market, and you have to ask yourself, hey, it kind of looks like that market's comfortable here. So, you may see, counter trend action back and forth, reactive trade in an overall broad-based range. I mean, that's just off the top of my head looking at this chart. We'll have to see. Hey, there's no doubt about it. The euro is a great speculative vehicle. I mean, it's a great trading vehicle. We had a lot of fun with it in taking a look at it this morning. You had a nice run up, and then typically you get into the U.S. session, and then you go counter trend slop. But it's what can I say? It's the euro. There's a reason why it's one of the most world's widely traded financial instruments. It's a good market to trade. Pound U.S. dollar, interesting. The pound, very interesting. The pound had led the charge on the way up, and then the pound slumped today first. Intraday, you had a double top way early in the day. Everyone else is making a higher high at this point. The euro actually triple tapped. You couldn't get above yesterday's high, couldn't challenge yesterday's high, so you double tapped out early in the midday London, and you didn't have much action. What's interesting about this is the pound was the leader on the way up, and it was the leader today, and it turned lower first today, and that was a bit of a harbinger that you weren't going to get any more upside in the U.S. session out of our good friends the Aussie and the euro. So watch the pound. She's a leader. Dollar CAD. One of these days I'm just going to skip right over this market. No offense to CAD traders, but it's just a boring market. Well, it's going to go up there and kiss that weekly line. Overall, the daily short-term trend's higher. However, I call that more sideways than anything. Technically, the short-term trend's higher. Obviously, the price pattern is lower. Intermediate-term trend is lower. Let's see if it, it's going to challenge par, I suppose. If it got as far as it did today, we'll probably see a test of par. So let's hang in there and see what happens next. Dollar Chief next. There you go. You're selling off back down towards those lows. Interesting asset class sell-off, and I guess Dollar Chief's tagging along. I'm a broken record here. I think you're in the midst of putting in a long-term bottom. I think it's going to be a slow, kind of a grueling process. You may see a little bit of volatility, when you get to that, when it becomes obvious you're in an accumulation stage, then you get some big play back and forth. But it's just my gut. I'm looking at that chart and I'm thinking boring. It's going to take a while for this guy to grind out a bottom. We'll see where she's at come springtime. That then may be interesting. Dollar yen. My good friend, the dollar yen. Same story. You're in a pretty broad trading range between the historic low at 80 and then 84 on the upside, where you see my maroon line, my monthly line. And it's counter trend on all time frames. I mean, I guess we can call this yearly support. And so you're on yearly support below, but monthly resistance above, then weekly support below, but daily resistance above. So you're really counter trend on a couple of different time frames. That's a market to avoid. Hey, let's look at the U.S. stock market. You had a correction today. This is typical because you get the mid-month 401k flows out of the way, the mid-month money flows. You have the money comes in the market at the beginning of the month and the middle of the month based on people's pay cycles. And you can see that there's the middle of the month money coming in. Well, not much of a noticeable reaction in the middle of the month, but beginning of the month, middle of the month. Beginning of the month, middle of the month. Same pattern here. So asset class market's correct. You'd look for weakness in those markets that were laggards on the way up. I'm referring kind of to the Aussie now too. The Aussie's slumping against that line. So if you see you get a 3-day correction in this big guy, that could do some damage to the Aussie. Maybe that flooding in Brisbane, it was a terrible, terrible thing from what we heard. I don't know if that's the effect on it, but Aussie kind of slumping. But hey, we'll see. Hey, thank you very much, everyone. My name's Jay Norris. I'll be back with you tomorrow.